Now here in this question, we are required to calculate cash inflow from operating activities. The particulars include profit and loss account, general reserve. Now students, general reserve represent appropriation of profits. Then provision for depreciation on plant is a non-cash item. Goodwill is also a non-operating expense that has been written off during the year. Sundry debtors represent current assets. Provision for taxation. Now students, it is also an appropriation. Before we start with this question, let us understand the treatment of provision for taxation and good and dividend in case it is given in the question. Remember students, for all other figures, the difference is taken into consideration. But for taxation and proposed dividend, it is assumed that the current year figure or the closing balance is the appropriation made during the year, and the previous year figure represents the amount that has been paid during the year as tax. Again, I'll repeat that the current year figure is taken as appropriation and the previous year figure is taken as the amount paid during the year. Difference is not to be considered here. So now students, starting with it, first thing is difference between closing and opening balances of P&L. That is 5,000. You can also write it as profit earned during the year. This is also profit earned during the year. It's one and the same thing if you write this, or difference between the opening and the closing balances of profit and loss account. Now to this amount, various appropriations would be added back or adjusted. General reserve. The opening balance of general reserve was 10,000 and the closing balance is 15,000. That means 5,000 reserve has been created during this year. So add transfer to reserve, which is 5,000. Then provision for taxation is also an appropriation. But in this case, as I had discussed earlier, the current year figure or the closing balance would be taken as the complete appropriation. So provision for tax made during the year. This comes to rupees 10,000. Now students, all the appropriations have been accounted for. So let us total this out. We will get net profit before tax and extraordinary items. So the total comes to 20,000. Once we have calculated this figure, we will now move on to non-operating and non-cash items. Now students, non-operating and non-cash items here in this question include provision for depreciation and goodwill. So let us see how they would be adjusted into this figure of 20,000. Continuing ahead, non-operating and non-cash items. Now in this question, we have provision for depreciation. The previous year figure was 5,000 and the current year figure is 8,000. Let me correct this figure. This is 8,000. So now students, that means additional depreciation has been provided to the extent of 3000. Add provision for depreciation made during the year, that is rupees 3000. Then we have goodwill. Goodwill, the opening balance was 20,000 and the closing balance is given to be 10,000. So goodwill written off during the year that is 10,000, the difference of these two figures. So now students, we can see that all the non-operating and non-cash items have been accounted for. So let us total it out and we will get net operating profit before tax and changes in working capital. It comes to rupees 33,000. Now again, as and when we move ahead, we will have to adjust the values of current assets and current liabilities out of this 33,000 so as to arrive at cash from operating activities. Let us see how that will be done. Now changes in working capital would be made. So the next part is changes in working capital. Now students, changes in working capital include changes in the values of current assets and current liabilities. So in this question, it is only the sundry debtors which are given to us. Remember, sundry debtors are assets and the value of sundry assets is decreasing by 5,000 over the year. So any decrease in the value of current assets should be added. So under the add heading, decrease in the value of sundry debtors, that is 5,000. No other information is given. So this would be cash generated during the year from operating activities the total comes to 38,000. Out of this amount, we will deduct tax paid during the year. Remember students, as I had discussed in the beginning of this question, the amount of tax paid is the amount of opening balance in the taxation account. Why so? Because it is assumed that this amount of 10,000 is appropriation for current year tax, whereas the previous year taxation provision would have been paid as tax. So this 5,000 is assumed to be paid off. So 5,000 deducted, 33,000 is the final figure that we get. It represents cash inflow from operations.